Hello everyone and welcome to another weekly market forecast video. So hopefully everybody has been having a great weekend and ready for the next week of trading. So let's see what we have for the week ahead. Of course, starting with the dollar index as we usually do. We have explained last week that we expected the dollar to make one more push for a new high, which is what happened. And we have generated Fibonacci extension area right here. So from this area, we are expecting a reaction lower in the dollar index from the next week onwards, which is going to correct at least the cycle that started from 27th of September. So if you are new here and you don't know about the Fibonacci extension areas, of course, you can consider checking out our service with the link in the description. We have a dedicated service in which we cover 2 weekly live sessions. We provide trade recommendations, and also soon we are going to hand out our comprehensive educational series in which our members will be able to have everything in one place, and we explain how these areas can be generated and what do they mean in terms of the market and when they are useful in terms of the analysis. On top of that, as I said earlier, if you have been following us for some time, our members that have been with us since our launch from last March, they will receive this educational series for free. And also, if you haven't been a member yet, as I said before, you can check us out. It's through Buy Me a Coffee page. The link is in the description. And we will be moving soon to our official website for most of the content, and we are going to hand out a free beginners trading course because we believe that a beginner's educational course should be for free, because in reality everything is for free. You can find all the information you need over the internet. Of course, some people, they don't know how to search properly, so we are going to create for the beginners a free educational course. But of course, to really be able to start learning how to trade, you need to have something more advanced, which is going to be obviously what we provide for our members. So for the dollar index, we are expecting this reaction to the downside first to take place from this week onwards before anything else happens. For the dollar yen, we are ending with this ending structure to the upside, the cycle from the 16th of September, and we should anticipate to see a reaction to the downside to correct at least this move to the upside. There is a small potential for one more push to the upside like that before it drops. Either of the cases, we are expecting soon the dollar yen to be providing with at least a corrective move to the downside towards the 150 area before anything else takes place in the market in the yen. Now for the euro has been trading lower since the 25th of September. We have been explaining that we expected some bounce and ideally one more push to the downside. This is what happened. Of course, the market extended lower during the last push of the dollar higher, and now the market is consolidating for this potential bounce to the upside, which we are expecting. So we are expecting the market to come and retest the 108 area at least before the next reaction. So the next move for the euro, it should be to the upside, and of course this we are expecting it to be for the time being a corrective bounce to correct this drop that we have seen from 112 to 105 area. For the pound dollar, similarly to the euro, we should be expecting to see a reaction higher for a bounce at least to the 129 area from these lows, 126. So there is a potential for a 300 pip reaction to the upside, and this should be the next bias and the next move in the pound for the coming week, even the next 2 to 3 weeks overall. Now let's have a look at gold. So gold has been within this decline from the 30th of October, which of course this target area was anticipated over the summer, which we have been explaining also to our members ahead of time about this buying area to the 2300 area. Then in July and August, the market gave another opportunity for the buyers for the 2370 area or so. And the targets were starting from the 2640 area and above. So this move lower from the 30th of October, it looks strong, and we believe that this is the first part of a bigger decline lower. This move right here should be ending, and a bounce from this Fibonacci extension area can be expected for the coming 2 to 3 weeks overall. But we believe that gold might have ended a bigger cycle, which we have been explaining yesterday throughout our members' weekly live session. So if you are interested to see the possibilities of the long-term cycles and be ready ahead of time what to expect from the market and how to position yourself ahead of time, and especially if you like to be also an investor, we cover these things in our member area and through our live sessions. So for gold, from this area, we can expect a bounce, but once again, we believe that this is going to be a corrective bounce, and then we might see more weakness. So overall, we also believe that the party time for gold has ended, at least for the near term. So we do not expect new all-time highs, at least in the next 2 to 3 months overall. So our bias for gold is a corrective bounce from this week heading into the next. Now for oil we expected some sort of a corrective bounce. It looks like this might be null. And now we have failed again, and we are under pressure for breaking the lows from September. So we are expecting ideally oil to continue lower and trade below the area of 65 and open bearish extensions lower for potentially heading even to the 60 area and might be below. So this was our longer term bias in oil from April, especially when we have been explaining once again about these two selling areas to our members, of course. So from the 87, 85 area, we have explained that this is a seller's area, and even the bounce here in October has provided with another weakness move. As you can see, there are many reasons behind it. Obviously, some of them they have to do with more supply, and also the other ones have to do with BRICS and the de-dollarization process. As you can see, things are changing geopolitically and economically, and you need to understand them if you want to understand the whole spectrum of the financial market. And also what we would like to express is that most of the people, they believe that because of the Middle East tensions, oil should have been trading higher. But we have kept explaining to our members, no, this shouldn't be the case, because there are bigger factors affecting prices of oil measured in dollars at this time. And we have been spot on with our forecast for oil, and we have been one of the few market analyst services in the industry that we have been able to make such big correct calls against, let's say, the majority. Even in popular TV channels, a few months ago, they have been trying to forecast higher prices for oil, but we have been explaining to our members this shouldn't happen this time around because of different reasons which we have been explaining. And here we go today, heading to the end of 2024 with oil being below the 70s area. And we can see more risks for lower prices in the market in the coming weeks and months to come. Now for Bitcoin, as you have seen from our previous videos, we expected the breakout to the upside. We have also shared one of our members only live sessions back from the 5th of August, how we have been able to present to our members that this was going to be a major pivot for Bitcoin's new all-time highs, and we expected how it should have spent September and October within an accumulation phase, and then we have seen the breakout to new all-time highs, and now what we can see is more upside in Bitcoin. Either with one more high, we are soon going to enter a period of consolidation, or sideways to lower price action, which we are not expecting to be anything aggressive, and then we are expecting the market to continue higher and break the 100k area. We have shorter term targets to the upside. Of course, the bigger picture for Bitcoin and the crypto market, you can get it if you get to our member live sessions. We explain to you how the whole crypto market is operated and how to link it with the rest of the instruments, because everything has a connection at the end of the day within a financial system. So if you want to be properly educated, once again, feel free to join us with the link in the description. Don't be shy. If you have any questions, send us an email at support@auruiforecast.com. We are more than welcome to answer any of your questions if we can, of course. Also, leave a comment at the comment section if you, let's say, have something to ask and you want it to be shown publicly. Let us know. We are here to help you at the end of the day and make sure that you get the best information we can provide. So for Bitcoin short term, we can see more upside, but soon we might enter into a period of a sideways to lower corrective structure, and this is what we can see next. Of course, from the indices, the S&P 500, the SPX cash index, we have reached a target area of the 6K, which we have been expecting, and now we might see a small pullback for more continuation to the upside. This is our primary view, and this is what we can see in the market. Alternatively, if the market from here does a bigger choppy correction, it should be something like that. We do not see anything major at the moment, but one more push to the upside we can expect once again. So there are a few variations here for the index. Of course, at this area there is no value of chasing it higher. We wouldn't recommend it to chase it higher at this point unless the market generates a potential area lower for buying and it's clear. Other than that, the market has provided a lot of opportunities during the year. For instance, this one was a major buying area that we have recommended also to our members. Then in early June, this was another pullback, another opportunity. And then we had also this area from August, and the market gave us another one here at the beginning of November. So at the moment, there is no value of chasing the S&P 500 higher, and it's much better to focus on other instruments or other pairs. So that's what we have for this weekend's market forecast video. So don't forget to leave us a like and subscribe, especially if you are new here. As we said, we are going to be providing much more content, especially from the next month. We have very big plans for 2025. Stay tuned because this will be something that you don't really see in other, I would say, channels. At the end of the day, we are with your side, and we want to make sure that everyone gets the best, let's say, education and especially information when it comes to the markets and also to execution venues, and we are going to expand more on that in the near future. You should expect to see a lot of valuable information from our site, which most of you are not familiar as of yet, because as I said before, not many people will talk about that, especially in our times and especially on YouTube. And we feel that a lot of people are being misleading. They follow misleading information. We want to at least try to help as many people as possible, the ones that they really want that assistance. So this is why we are here. So enjoy the rest of your weekend, guys, and we will see you soon in the next video. Don't forget also to turn on your notifications. Also, we have a Telegram channel which you can join and follow with the link in the description. Everything you need is actually in the description, so feel free to let us know as well if you have any questions overall. Enjoy the rest of your weekend and see you in the next video. Take care.